Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grubner. With us, as always, to talk all things markets is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Definitely plenty for us to talk about this week in terms of reports. But to get things started, let's recap what happened this week in the markets and really some good news in parts of the markets.
Yeah, absolutely. I think generally you look again, and it's been nice for us to be able to talk about for a few weeks positive price moves instead of negative price moves. And this is another week where most things are higher. If we look at cash cattle this week, a little more than $2 higher on the week. The feeder cattle auctions this week were anywhere from steady to $3 higher. If we turn our attention to the futures side, October live cattle futures contracts were down about $1 this week, while the September feeder cattle futures contract also down about $1.70 on the week. The choice box beef price gained this week, up $12.60. Now that puts it just $17 below where it was a year ago at this time. So we're slowly catching back up to year ago levels on that choice box beef price. Ribs and loins both pretty strong this week that I think helped drive that choice box beef price higher. On the hog side, cash barrel and gilt prices were $1.25 higher on the week, and that October lean hog futures contract was up a little more than $1.10 on the week. The pork cutout value gained $2.33, now only leaving it $7.25 below year ago levels. Hams were really strong this week on the hog side of the equation.
Scott, when we look specifically on that box beef price, we've seen consistent gains week after week in recent weeks. Does that signal that maybe we're headed back to our normal, that we were at least closer to pre-COVID levels?
So I certainly think closer. I keep reminding us that there's a lot of cost between farm and ultimately retail that I think will keep margins higher at each point along the way of that chain from farm to consumer. But it's nice to see maybe things in better alignment, closer to pre-COVID alignment, that's for sure.
We've been talking and kind of recapping what's been going on slaughter-wise to keep kind of a thumb on hog slaughter, cattle slaughter, and how things have been trending. Talk to me a little bit about what we saw this week.
Yeah, so really nothing but good news again this week. We started on the cattle side, USDA telling us 652,000 head of cattle to be slaughtered this week. That's 2% above where we were a week ago, slightly below year ago levels, but maybe gaining for a change on the cattle side. I've been a little worried. We've been a little slower on the cattle side, it seems like. So good run this week. Hogs, 2.618 million head of hogs. That's 59,000 head more than a week ago. 2.3% higher. We're 3.4% higher than a year ago. And then I remind us, it was just a few weeks ago, you and I talked about year-to-date hog slaughter was just slightly above year-ago levels. We're now 1.2% above year-ago levels. So we're gaining on the hog side, but we need to keep pushing a lot of hogs for the remainder of this year.
And definitely to get into that backlog and further get into that backlog in the production system.
That's right, because we know that fourth quarter is already going to be pressured even without the COVID backup that we have. So just going to continue to need big runs here.
All right, let's talk a little livestock slaughter this week. Man, there is a lot of red meat production.
Yeah, that's right. You look at commercial red meat production, it was a record for July. Pork production, really led the way, up about 7% relative to where we were a year ago at this time. So we also saw higher beef production in July relative to a year ago, up about 3%. So both those things really driving us to more red meat production. Just to recap here a little bit, year to date, hog slaughter is about 2% above. Remember, 1.8 was what we were talking about earlier. But you add with that the weight increase of 0.5% and got more pork production year to date. Also, when you look at the cattle side, although cattle slaughter is 4.2% higher, when you look at weights being up 2.9, that offsets a lot of that lower 4.2. So I always say we're catching up for what was March, April, May that really struggled because of processing plant slowdowns. And we're going to see, I think, more production here as we get into August, September as well.
I hate to be the same drum week after week, but how important is that consumption and demand component, both globally and here domestically in the United States, as we see these record levels of red meat production month after month?
Yeah, for me, it is the issue that we have to stay focused on. And I'm worried for a number of reasons. And I'll talk domestic demand here for a minute. So what's going to happen with the fourth round of stimulus? Are we going to put more checks in people's hands that maybe will use a portion of that check for food purchases? And if we don't, does that demand drag hurt us? Certainly the economic downturn. We're just kind of getting to that stage of the COVID-19 effects. And so if we start to see a real serious drag on the economy, I think we're seeing a few more or places go out of business, a few more businesses that are leaving, and I worry about what that means. Internationally, I think we have the same COVID-19 issues in a number of countries. They need to recover their domestic economies as well. So we know we're going to put a lot of hogs and cattle in front of consumers. We sure need good demand.
You bring up the economic aspect of it, and we get concerned about jobs, job recovery, a slowdown in job recovery. How does that all come into play? Because I think that it's going to be highlighted more, especially over the next couple of months, as we get into this heated election and debate cycle.
Yeah, so for sure, I will say, I think we don't want to forget it's been muted quite a bit by the stimulus work that federal government's already done. And I'm not saying that being critical or pro, but I just go, now we're going to get into potentially could be a bigger drag. And so I sometimes get the sense people feel like we've come out of the worst of COVID-19. And I go, just don't forget that economic hammer, I think, is still laying there. And so there's unfortunately downside risk left in these markets. Exactly how it plays out, I'm not so sure. And I say there's downside risk because I'm telling you, we're going to need every shackle space we can get our hands on the hog side in particular. So supplies are going to be plentiful, and we need fairly strong demand. So it's not a combination I like in terms of what it means from a risk standpoint.
I have a logistical question, and maybe this isn't the proper place for it, but I am curious, could we potentially start to see packers and processors moving bigger numbers again, building up into that fourth quarter to try and alleviate as much pressure as they can, knowing that shackle space is already tight and knowing they still have to work through those hogs?
Yeah, I actually think both cattle and hogs we're starting maybe to see just a little bit of that starting to happen. And because everybody's anticipating a big run. I think the important thing to remember, it's difficult to know how many hogs or how many cattle we've actually backed up. There are a lot of folks out there who are making some estimates of those numbers, and I don't disagree with what I hear, but I remind us, none of us really know for certain what that situation is like. I hope it's less than I hear some talking about, so we don't have quite the problem coming that some might suggest. But I think we're going to continue to see processors focused on slaughtering cattle and hogs, and maybe at the expense of some of the value added that they've tended to do historically, trying to increase slaughter numbers, even if they don't get all the value out of that carcass they once did, just purely trying to maximize runs as we get through the remainder of 2020.
Last report for us to talk about this week, Cattle on Feed came out this afternoon, and it was a doozy.
Yep.
I don't think there's a better word for it.
So we certainly are catching up, I guess is the right way to say it. As you recall, placements a few months ago were certainly low. You look at July placements out of the report being up 11% of where we were a year ago. That's outside the pre-report estimate range. The high end was 108.7. So we certainly surprised the market with that placement number, and on feed as well. Slightly outside the range with a 101.5 as of August 1. So we're outside that pre-report range on both on feed August 1 as well as placed in July. We knew we were going to place a lot of cattle in July, but again, I think it surprises us now. Some interesting things out of that report. You look at placements by weight category. We're up in the less than 600. We're up in the 6 to 699 weight group. We're up in the 7 to 799. We're up in the 8 to 899. You got to get in the 900 and above categories to actually see some reduction. So, those cattle are going to be a ways away from ultimately being slaughtered, but we know what's coming eventually and where they're being placed at. So Kansas, Nebraska, Texas, Colorado, all were up in terms of July placements relative to a year ago. You look at a place like Colorado, 27%. Now we don't feed that many cattle in Colorado, but Kansas up 16%. The rest of the country, all right, remember this is 1,000 head plus feed yards, was down 6.4%. So it just tells you how those 4 states are really driving that increase in overall placements. So maybe some of the more farmer feeder feed yards, smaller feed yards, also are the ones that are down.
Scott, that's it for us this week as we look ahead to next week, another pretty busy week for reports.
Yeah, so we start next week with cold storage, and we'll also then get reports on both U.S. and Canadian cattle and hog mid-year inventory reports. So another shot at what's happening on the supply side from a more North America perspective.
Excellent. Good to see you. We will see you again next Friday.
That sounds great, Megan.
To have a weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can submit questions and comments there as well. And make sure to check out all of the great Brownfield podcasts. Those are available at brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.